day everyone! Today we're going to review financial statements analysis. And here is our outline. We will start with the review of the financial statements, and afterwards we will proceed with the financial statements analysis. We will talk about the limitations of the FS analysis, and then we will do the vertical and horizontal analysis and compute for the financial ratios. I grouped the financial ratios into 5 categories. Sa ibang libro, may ibang categories, but I find these categories na more useful and more meaningful, pero pare-parehas lang naman yung ratios na yun. And then afterwards, we will have some true or false questions, and then some multiple choice theories, and of course, problems on financial statements analysis. So, review lang. Financial statements. I highlighted the keywords. These are the records about the financial activities and conditions of any organization, and there are 4 major components. The key financial components or financial statements are the balance sheet, income statement, statement of changes in equity, and statement of cash flows. 5 talaga yung FS natin, but as far as financial statements analysis is concerned, we are using this 4 in our computation and in our analysis. Okay. Balance sheet, ano nga ulit ang balance sheet? This is just a snapshot of the financial position at a given point in time. For example, December 31, 2019. This is also known as your statement of financial position, wherein you can find that the assets, total assets, ay equal sa total liabilities and shareholders' equity or capital. So, here are the items that you can find in the balance sheet. We have, for the assets section, we have current assets and non-current assets. We also have for liabilities, we have current liabilities and non-current liabilities. Okay, just an overview of the shareholders' equity. We have the retained earnings, treasury stock, preferred, common, and the APIC or additional paid-in capital. Again, the total assets should be equal to total liabilities and shareholders' equity. Let's move to income statement. A quick review. This provides the financial summary of the firm's operating results. Dito mo makikita yung performance during a given period. So, you will see the summary of the revenue and the expenses through both the operating and non-operating activities. Ito ang parang report card ng mga managers. Kung ang mga estudyante, ang kanilang performance makikita sa mga grades nila, ang mga managers naman makikita sa profit and loss statement or income statement. Now, the third key component or key financial statement is statement of changes in equity or the capital statement. It shows the changes during the period. And it shows the beginning and ending balance, and of course, what happened during the accounting period, the changes. Okay? And sometimes we may also refer to this as the statement of retained earnings or statement of changes in partner's equity in case of the partnership or capital statement. And then afterwards, we have the statement of cash flows. Sa cash flows, we can see lahat ng cash inflows and outflows during a given period. And this actually merges the balance sheet and your income statement. There are 3 activities that we have in statement of cash flows. The activities are grouped into 3. It could be operating, investing, or financing. So, pag cash flows related to operating activities, lahat na may kinalaman sa sales and productions. Or in other words, from the term itself, operating activities, so it may kinalaman sa operations. Other than that, mapupunta na siya sa either investing or financing. Marami pa rin nalilito sa investing and financing activities. To differentiate the two, kapag investing activities ang pinag-uusapan natin, the original transaction is yung company ang nag-i-invest papunta sa other business or they invest by purchasing or selling the fixed assets. So, investing activities, yung company ang nag-i-start ng investment. Kung ayaw na niya ng investment na yan, ibinebenta niya yung fixed assets or wini-withdraw na niya yung kanyang interests in other businesses. Kapag financing activities naman, baliktad, yung company naman ang pinag-i-investan ng mga investors, it could be financial institution or owners or stockholders. So again, kapag investing activities ang original transaction, yung company ang nag-i-invest. Pero kapag financing activities, sa company nag-i-invest. Okay? Kaya nga, yung mga nag-i-invest sa company, these are the sources of your finances. Okay? So, those are the operating, investing, and financing activities of the statement of cash flows. And now, we will proceed with the financial statements analysis. But before we proceed, let us talk about the limitations of FS analysis. There are companies in the same industry, but there could be differences in the accounting methods that they have. And that makes the comparisons difficult. Ibig sabihin, hindi na ganun ka-meaningful din yung comparison dahil magkakaiba ng accounting method na ginagamit. Some may be using LIFO, some may be using average, or some may be using FIFO method. Okay? And when the managers assess or analyze, they have to look beyond the ratios. Yung mga numbers na yon, walang meaning or very minimal lang ang meaning niyan unless we do or we look beyond those ratios, such as the technological changes. Ano kaya meron yung company mo or ano kaya yung wala ang company mo na meron sa iba? Siguro yung mga kalaban natin in the industry, they are adapting yung advances in technology. Kaya naman, they might have better performance kasi they have the capability also na maka-adapt sa mga technological changes. Industry trends. Hindi enough na tingnan natin yung ratios natin. We have to check the industry. Nasaan level na kaya tayo? Meaning, nasang position na kaya tayo? Are we on top or are we on the lower or bottom part sa industry? Baka tayo ang nangungulelat. So in other words, yung ratio na yan, walang silbi unless you compare with other na companies in the same industry. Consumer tastes and economic factors. These are just four of the some information or some factors that the managers should look into kapag gumagawa sila ng financial statements analysis. Baka nagbago na yung tastes ng consumer. You really have to consider that because at the end of the day, yung mga consumer naman talaga yung pinaka bumubuhay sa isang business. So, kung walang bibili, so wala tayong business. Wala tayong kita. Alright. We will now prepare and interpret financial statements in common size and comparative form. What does it mean? Statements in common size and comparative form. Pag sinabi natin common size statements, we are actually doing the vertical analysis. Kapag peso and percentage changes on statements, we are doing the horizontal analysis. Kapag ratios naman, we are dividing one financial statement element over the other element. Okay? So, ibig sabihin, an item, itong note na to, this is very important tulad ng sinabi ko kanina, halos walang meaning yung mga numbers na nakikita natin unless we compare with our competitors or we compare with our own performance in the prior years. Alright. So, let's do the vertical analysis. Kapag gumagawa tayo or naggagawa ng vertical analysis, we are coming up with the common size financial statement. So, sa common size financial statement, each item is expressed as a percentage. So, kapag balance sheet, review lang natin kapag balance sheet, all items are expressed as a percentage of total assets. Meaning, yung total assets natin yung 100%. Kapag income statement, yung sales naman ang ating 100%. So, all items are expressed as a percent of sales. So, lahat ng items sa ilalim, i-divide mo ng sales. Alright. So, I'll be using an example from the Clover Corporation for this year and last year. So, we are going to prepare a common size statement. So, here is the income statement for this year and last year. As you can see, we will express sales in terms of we will express sales as the 100%. So sale is usually the base and it is expressed as 100%, and all items sa ilalim will be divided by sales. Okay, so if we do that, what will happen? So let's say 360. Let's say for this one, 360. So that would be 360,000 divided by 520,000. Just example. So that would be 69.23%. Tapos gagawin natin yan sa lahat ng items dito. After doing all of these or all those operations, ito po yung magiging result natin. Let us check. Yung gross margin natin, 165 over 480. So that would be 165,000 divided by 480,000. Okay, so we have 34.38%. So here, 34.4%. Okay? So lahat in-express natin in terms of percent. And we call it common size statement. Bakit common size? Kahit na magkakaiba yung level natin dito, lahat na to, ang tingin lang natin ay, ang pinakamataas ay 100%. And we can have an idea also that for every peso sale, 3.4% of that will go to us as our net income. Okay, so what conclusion can we draw from here? Makikita natin na if we compare yung mga percentages here, just for an example, ito, operating expense. Last year, 26.2. This year, we improved 24.8 with respect to sales. Alright. Let's move to vertical or horizontal analysis rather. Horizontal or trend analysis. So we are computing for the peso and percentage changes. Kapag peso change ang pinag-uusapan natin, importante yung nandito that we are trying to highlight those that are most important economically. Pag peso change, nakikita natin yung changes that are most important economically. Kapag percent change ang kinocompute natin, doon natin mapipinpoint yung mga changes that are most unusual. And we are going to investigate yung mga changes na yan na very important economically and mga changes na yan that are really unusual. Okay? If we can do something about it so that we can further improve our performance. So again, we are going to use the illustration ng Clover Corporations. Here. So ito yung balance sheet natin. So how do we do the horizontal analysis? So we have the this year and last year na balances for cash. Okay, so this year 12,000 pero last year 23,500. So here we will put the increase in terms of peso or amount, and here for the change. Okay, so that would be 12,000 minus your 23,500, meaning our cash decreased by 11,500. Pero how many percent did our cash decrease? So divide by 23,500. So that would be 48.9% decrease. So for your cash, how to compute for the peso change? Just like what we did earlier, this year minus last year. Okay, so the current figure minus the base figure. Okay, we use the base figure as our point of reference. Kung 2 taon lang pinag-uusapan, the base year is the previous year. Pero kapag 3 or more years ang pinag-uusapan natin, there is always one base figure lang or one base year figure lang na point of reference kahit na ilang taon pa yung mga ina-analyze natin. Alright. So, paano computing yung change? So, that would be peso change divided by the base year figure, just like what we did earlier. Okay, so going back here, 12 minus 23.5. So, ang answer natin is 11.5 na decrease. And again, the 48.9% na decrease here. Okay, here is the solution for that. And we're going to do it sa lahat ng items under the assets. So 60 minus 40, so that would give us 20,000 increase. 20,000 divided by 40,000, so that would give us 50% increase. So gawin natin sa lahat yan, and after doing that, ito yung magiging result natin. Okay? So that indicates decrease. So meaning kapag walang parentheses, that is increase. Okay, so that's horizontal analysis. From here, ito kasi puro mga assets. We can do yung mga para sa liabilities naman and stockholders equity. Kaya natin gawin uli yung mga yan. But for now, instead of doing the liabilities and stockholders equities horizontal analysis, let us proceed or take a look at the income statement accounts. So ito yung income statement natin. Comparing the this year and last year. So what happened to your sales? 520 ngayon, 480 last year. So 520 minus 480, so that would give us 40,000 na increase. Ilang percent na increase yun? So 40,000 divided by 480. So that would give us 8.3 na increase in our sales. Okay? Kapag ginawa natin yun sa lahat ng items, so yan, 360 minus 315, so that would give us 45,000. So ano yung makikita natin dito sa scenario na to? Looking at the sales, nag-increase. Pero bakit looking at the net income, nag-decrease tayo? 8.3 ang increase, 21.9 ang decrease. Okay, so despite the increase in sales, bakit kaya nag-decrease ang ating net income? So let's try to analyze further. Tingnan natin. Oops. We have 14.3 here. We have 2.1 here. Ibig sabihin, tumaas ang sales. Ayan. Kahit na tumaas ang sales natin na 8.3, tumaas din ang ating COGS at saka operating expenses ng 14.3 and 2.1 respectively. Ibig sabihin, yung magnitude ng increase ng sales natin is not enough to give us more income. Mas malaki yung mga increase in our expenses. Okay? That's why kahit na may increase in sales, decrease pa rin tayo sa net income. Oops, trend percentages. Trend, we are referring to 3 or even more years. Sabi natin kanina, we express the trend percentages ng several years in terms of a base year which is equal to 100%. So it's either we're going down or we're going up in terms of, it could be sales, gross margin, or income. So let's check this example. Okay. So berry products for the years 2010 and 2014. So that will be our example for trend analysis. So, ito yung data natin. For the years ended December 31, so there are 5 years involved. Tapos, ang base year natin is 2010. Okay? For sales, COGS, and gross margin. Ang tanong natin, ano ang percent change or ano yung trend percentage natin in 2011, 12, 13, and 14 in terms of sales, COGS, and gross margin. Ang 100% natin ay itong 2010. Paano natin makakompute yung trend percentage ng 2011? So that would be 290,000. 290, again, 290,000 divided by 275,000. So, our trend percentage is 105%. For your COGS, ano nangyari na 2011? 198 divided by 190. So, that will give us 104 increase in our COGS. Okay, so tingnan natin yung 2011. Ayan. So, gross margin is 108 kasi 92 divided by 85,000. Okay, if we continue, for 2012, how to compute for the trend percentage? So, that would be 320 divided by 275. Hindi 2011. It is always the base year na point of reference natin. So, for 2012, for example, check natin. 320,000 divided by 275,000. So, ang dapat na lalabas dito ay 116,000. 116% rather. So, check. 116%. Okay? So, ibig sabihin, yung 2013 and 2014, we will always go back sa 2010 as our base year figure. Okay? Tapos pag tinignan natin yung ating trend analysis, yung ating COGS 100, 104, 118, 132, 150, nakita natin yung COGS pataas. So nakaka-worry ba na tumataas ang COGS? Depende. Sana tumataas din yung sales natin. Let's check. 100, 105, 116. Yes, tumataas naman. Pero kung makikita natin, mas malaki yung pagtaas ng COGS kesa sa pagtaas ng sales. Pero, yung gross margin natin, pataas din. By looking at the table, isa-isa mo talaga titingnan kung tumataas or bumababa. Kaya naman minsan, we can make use of graphs. Ayan. So, sa graph, kita natin, kahit na hindi natin makita yung mismong figure, na ang trend natin is going upward. Okay? Ayan. Quick check. So, which of the following statements describes horizontal analysis? Okay. So, a few seconds to answer on this one. Is it a statement that shows items appearing on it in percentage and peso form? Is it a side-by-side comparison of 2 or more years financial statements? Parang C, a comparison of the account balances on the current year's financial statements, or parang D, none of the above. So what's your answer? May answer ka na? So let's reveal. It's boy. A side-by-side comparison of 2 or more years financial statements. Okay. Here is another activity. But I suggest you pause the video now. You have 6 minutes to answer. Wag mo pala muna i-pause. You have to listen to my instruction. Okay? So, you have to answer this activity for 6 minutes only. Okay? So, once I give a go signal, you pause for a while, and then after 6 minutes, you go back to the video to find out if your answers are correct. Okay? So, looking at this, may percentage sa kanan. So, here are the figures. We are actually doing the vertical analysis. Okay? So, your 6 minutes start now. Okay? Pause muna. And then now, we're going to reveal the answer. Ayan. Answers, please. So, please compare your answers with these suggested answers. So, I hope you were able to get all the answers correctly. But make sure you stick with the time. 6 minutes lang. Okay. Here's another activity. So I'm giving you 7 minutes to do this. So we have the peso change and percent change, meaning we are doing the horizontal analysis for 2017 and 2016. Okay, so your 7 minutes starts after mo mag-compute, you go back to the video and reveal the answer. So your 7 minutes start now. Pause muna. Okay, so welcome back. So pares kaya tayo ng answers. Ito ang answers natin, suggested answers. Ayan. Okay, you check your work against the suggested answers. And I hope you were able to get all the items correctly. Ayan. So before I proceed, let me just acknowledge the following PowerPoint authors. Yung mga illustrations kanina, galing talaga sa kanila yung mga magagandang illustrations na yon. So thank you so much Dr. Susan, Dr. John, and Dr. Cynthia sa mga illustrations kanina. I just modified their work. Thank you so much and for allowing us to use your illustrations. Alright. Thank you again, Dr. Susan, John, and Cynthia. Check natin. Saan na tayo ngayon? We are on the financial ratios. Okay. So, as I've mentioned kanina, these are the 5 categories na sinuggest natin. Okay, but again, in the other books, pwedeng ibang category ang ginamit. So, yung mga ibang ratios napunta lang sa ibang category. Alright. So, financial ratios natin, we're going to use problem number 1 as our illustration. And here is your problem number 1. Ayan. So, we have Sophia Trading Corporation. We have here the balance sheet as of December 31, 2019 and 2018. So, showing here the assets for 2019, 720,000, 665,100 for 2018. So, screenshot muna before we proceed. We also have the liabilities and stockholders' equity for December 31, 2019 and 2018. Looking at the shareholders' equity, makikita natin na meron siyang preferred stock at saka common stock. So, dalawang stocks yung meron tayo. And makikita natin yung details ng par value niyan. So, from here, we can have an idea ilan yung number of common stock at number of preferred stocks that we have. So as you can see, for common stock, we have 150,000 for 2019 divided by the 10 pesos na par value, meaning we have 15,000 ordinary shares on December 31, 2019. And we have divided by 10 again, 14,400 ordinary shares on December 31, 2018. Okay, so those are the data or details in your balance sheet. Screenshot please. Now, screenshot please for the income and retained earnings statement. So, we have here na net income na 67,680 and some details here regarding our retained earnings. We have the net income here. Now, from sales minus the cost, minus the OPEX, interest, and taxes, we have the net income after tax. But, remember, yung net income natin, hindi agad mapupunta sa common stockholders dahil ang priority natin ay mga preference shareholders o mga preferred stockholders. Okay? So, ibig sabihin, ito yung net income natin na 67,880. I-less muna natin yung preferred stock dividends. That's the only time that we can compute for the net income na available sa ating mga owners or common stockholders. Okay? And this is the dividends for common stockholders, and this is the addition to your retained earnings. Screenshot please for the income and retained earnings statement. Here are some additional information that can be used as we go through all the ratios. So in both 2018 and 2019, dinistribute lang yung cost of sales as to variable na 80%, tapos fixed ang 20. Yung OPEX natin, we're 60% fixed, so 40% variable. And it is stated here na ang common stocks ay traded in the market at 20 pesos per share. Now, we will apply lahat ng ratios. These are the most common ratios na ginagamit sa businesses. Pero syempre, depende pa rin sa nature ng company or ng business. At ito rin yung mga mas madalas na ginagamit or lumalabas sa sipale. Okay. We will start with liquidity ratios. Liquidity ratios will actually assess the ability of the company to pay for the currently maturing obligation. Or in other words, yung mga current liabilities natin. So we will focus on these four. Actually, yung una hindi naman talaga ratio. Difference lang siya ng current assets and current liability. Ibig sabihin, kung gusto mo malaman if you are capable of paying the current liabilities, lahat ng to ay gagamit ng current liability in the formula. So, let's start with working capital. So that is the excess of current asset over current liabilities. So in other words, that is just CA minus your CL. Okay? Here, yung current assets natin, so as we go back sa ating problem kanina, yung total current assets natin ay 201,000. Tapos, yung ating total current liabilities ay 80,000. So, kaya 201 minus 80,000, we have working capital of 121,000. Alright, review lang. Let's move to current ratio. Kanina sa working capital, CA minus CL. Current ratio, CA over CL. Divided by CL. Okay? Kaya kapag ang answer sa working capital ay 0, ang answer natin sa current ratio ay equal to 1. Kasi equal yung CA at saka yung CL natin. Okay. So, again, the current ratio will tell you if you are capable of paying the current liabilities based on our current assets. Let's check if we are capable. So, yung ating data kanina, 201,000 for the CA, CL 80,000. So, we are 2.5 times capable of paying the current liabilities based on our current assets. Okay. But remember, hindi lahat ng current assets natin ay nako-convert into cash. Kasi, pag usapang pag-settle ng current liabilities, ang in-expect natin na pang-settle niyan talaga ay cash. Kaya yung current assets natin, we are expecting those to be converted into cash. Ibig sabihin, pag bayaran na, hindi naman pwede nang ibabayad natin sa empleyado natin or ibabayad natin sa Meralco ay mga inventories or receivable. So, dapat ang ibabayad natin sa kanila or generally, ang ibinabayad natin ay cash. Kaya naman, may worry tayo ng konti sa ibang current assets. For example, inventory. What if hindi mabenta agad ang inventory or hindi agad ma-liquidate into cash? So, the problem would be, baka hindi natin ma-settle yung current liabilities natin. Kaya naman, we go to the next ratio. The quick ratio or the acid test ratio. When you say quick ratio, we only include quick assets or those assets that can be quickly converted into cash or cash na talaga. So, meaning, that would include your cash, marketable securities, your AR, at pati yung mga current na notes receivable natin. Okay? So, minsan, ang given naman ay current asset. So, pag current asset ang binigay, ima-minus natin si inventory and prepayments. Pero kung itemized, ito naman yung i-add natin to arrive at your quick assets. So, going back to our example. So, here is our example. So, ang quick assets natin ay cash, marketable securities, and accounts receivable. Inventory and prepayments, hindi kasama. So, that would be 4,827.72. So, a total of 79,500. Kaya, quick ratio, 79.5 over 80. So, that would give us 0.99375. Kapos tayo ng konti to pay for our current liabilities. Just in case wala talagang mabebenta na kahit anong inventory, kulang tayo ng pangbayad ng current liabilities natin. Okay? So, ang gusto natin with the current ratio and quick ratio is of course greater than 1. Okay? But not too high. Kasi kapag sobrang taas ng ating mga ratios, so may problema rin. So kung sobrang taas ang current ratio natin, maybe dahil sobrang dami ng inventory natin, so nakakatakot siya, natulog lang yung pera natin sa inventory. Or sobrang dami ng cash natin, sayang naman na hindi natin na-invest into other opportunities. Now, speaking of the ability to pay for the current liabilities, dito sa quick assets natin, may worry pa rin tayo kasi itong accounts receivable and current notes receivable, what if sa hindi inaasahang pangyayari, just like in this 2020, may COVID, maraming mga customers ang hindi nakakabayad ng kanilang accounts payable, so receivable natin. So, hindi naman natin laging controllable na makukolekta natin yung mga AR na yan. So, kung may ganong worry, yung ibang managers, they would settle with looking at the cash ratio. Sa cash ratio kasi, we are looking if the cash and cash equivalents are enough to pay for the current liabilities. And ang itemized na dito sa cash and cash equivalents would be the cash and marketable securities. So looking at your balance sheet kanina, so we have cash and marketable securities, so that would give us 4.8 at saka 2.7. So total of 7.5 na cash and cash equivalents divided by the current liabilities. So that would make us or show us that we have 0.09375 na cash ratio. Ang baba. So we have to do something about it. Kung ang manager ay conservative sa tatlong ratios na yan, ang pinaka gusto niya, ang pinaka pwede siyang matulog na mahimbing na alam niya makakabayad siya ng current liabilities ay kapag ang cash ratio niya ay equal to 1. Kasi wala na siyang worry kahit hindi ma-convert yung inventory into cash and AR into cash, they can still pay for the current liabilities. So this is too low. Ang gusto natin sa cash ratio is equal to 1 at least. Okay? Now, let's have an exercise. We call it increase, decrease, or no effect. So ang gagawin lang natin, we're going to state the effect of the transactions. I listed down 10 transactions. And you have to tell me if yung current ratio natin will increase, decrease, or walang effect yun sa current ratio. Okay? But, let us take note of this. We have to assume that the current ratio is presently greater than 1. So, siguro, we can think of any numbers na greater than 1. So, siguro kahit mga 5/4, that is still greater than 1. Okay, so here are the transactions. Number 1, collection of accounts receivable. So here, lagi tayong titingin, ano ba ang nangyari sa current assets natin and current liabilities. Okay, check natin ano nangyari sa current assets and current liam. Collection of AR. So, pag nag-collect ng AR, tumaas ang cash, nasa CA, bumaba ang AR, nasa CA. So, parehas nasa taas, same magnitude. So, the answer is no effect. Parehas kasi nasa taas. Okay? Collection of accounts receivable within the discount period. Oops! Ito, tumaas ang cash. Bumaba ang AR natin. Pero, yung pagtaas ng cash ay mas maliit kaysa sa pagbaba ng AR. Ibig sabihin, mas malaki itong pagbaba ng ARs. Therefore, the answer is decrease. Okay? Burahin muna natin. Now, declaration of cash dividends. When we declare dividends, debit retained earnings and credit cash dividends payable. So meaning, walang nangyari sa taas pero yung ibaba mo, tumaas. Pag tumaas ang denominator natin, what will happen to the answer? It will decrease also. Okay? Next, additional stock is sold for cash. So whether preferred or common stock, binenta for cash. May effect ba sa current asset? Yes, tumaas. ang cash natin. May effect ba sa current liability? Wala. Kasi yung stock ay nasa shareholders' equity. So therefore, tumaas ang cash. What happens to the current ratio? Increase. Okay? Accounts payable or paid. So what happens to our current ratio pag nagbayad tayo ng accounts payable natin? So ang CA over CL natin na inassume kanina ay 5/4. So pag nagbayad ng accounts payable, magma-minus tayo sa cash, magma-minus tayo sa current liabilities. So affected yung taas at saka sa baba. So what would be your answer now? Parehas na nag-decrease yung current asset and current liability. So the answer is no effect ba? Let's check. Let us assume na ang binayaran natin ay 1 minus 1. So that would be 4/3. Dati kasi siyang 5/4 na 1.25, 4/3 ay 1.33. So therefore, kung nagbayad ka ng accounts payable, given the current ratio is greater than 1, the answer is increase again. Okay? Let's erase. Ayan, ayaw na nga ma-erase. Alright. Number 6. Equipment is purchased for cash. Equipment is long-term or fixed asset. So, walang kinalaman sa current asset. Pero yung purchase for cash minus sa cash. May kinalaman sa current liability? Wala. So, tumaas ang, balikan natin, CA over CL. What happened to your cash? Bumaba. CL, wala. So, what happened to your current ratio? Decrease. Inventory purchases are made for cash. Tumaas ang inventory, CA. Bumaba ang cash, CA. So, therefore, parehas na nasa taas ang effect, same magnitude. The answer is no effect. Inventory purchases are made on account. So, kapag bumili ng inventory, made on account, so what will happen? Inventory, tataas yung CA. On account, tataas yung CL. So, what happens to our tumaas tong numerator, tumaas yung denominator. So, what will happen to your current ratio? No effect ba? Let's check. 5/4 ulit tayo. Nadagdagan ng inventory, nadagdagan ng payable. So, naging 6/5. Dating 1.25, naging 1.2. So, ang answer natin sa number 8 ay decrease. Okay? Decrease tayo. Decrease. Alright. Number 9. Sold an inventory on account. So, ang inventory natin, bumaba. Tapos, ang AR natin ay tumaas. So, what happens to our current ratio? No effect ba? The answer is no. The answer is hindi no effect. Okay, why? Kasi bumaba inventory, tumaas ang AR, yung AR natin ay mas malaki kaysa sa inventory. Why? Because kahit silent ang problem, we sell our inventory with markup. Because we set the selling price with reasonable allowance for profit. Kaya, kapag nagbebenta ng inventory, palaging tumataas ang ating current ratio. What if the inventory was sold for cash, just like in number 10? So, papalitan lang natin itong AR natin ng cash. Palitan natin ng cash. Okay? Pero again, the magnitude of your cash is greater than your inventory. Mas malaki yung pagtaas kaysa sa pagbaba. Kaya naman ang answer in number 10 is also increase. Alright, so let's take a look at another example. What if baliktarin natin? Kasi lahat ng to ay current ratio greater than 1. What if current ratio less than 1? Parehas lang kaya ang magiging sagot sa lahat. So let's erase the notes kanina. Alright, so we have to state the effect again of the following transactions on the current ratio. Pero we have to assume this time na current ratio is less than 1. Okay, same transaction. Collection of an accounts receivable. Mapag greater than 1 or less than 1, ang affected lang sa atin, balik tayo dun sa CA over CL. Ang affected lang sa atin ay puro CA lang. Parehas na nasa taas yung AR at saka yung cash. Therefore, no effect pa rin. What if we collect within the discount period? What's your answer? Tumaas ang cash, bumaba AR, pero mas malaki yung pagbaba ng AR. Kaya naman, ang answer ay decrease pa din. Okay? Declaration of cash dividends, CA over CL, that is, ang assumption naman natin, kanina 5 over 4, balik na rin lang natin, 4 over 5 naman tayo. Declaration of cash dividends. Affected to? No. Affected lang yung ilalim. So, nadagdagan tayo ng payable. So, therefore, increase ang denominator, still, decrease pa rin ang answer natin with number 3. Additional stock is sold for cash. Affected yung numerator lang. Tumaas ang numerator natin. So, therefore, increase. Accounts payable are paid. So, ano nangyari sa numerator natin? Mag-minus tayo ng 1. Ano nangyari sa denominator? Minus din tayo ng 1. From 4 over 5, magiging 3 over 4 tayo. 4 over 5 is 0.8. 3 over 4 is 0.75. Therefore, ang answer natin ay decrease. Okay? Equipment is purchased for cash. So, nabawasan ang cash. Ang equipment natin ay, again, non-current asset. So, therefore, cash ay bumaba. So, ang current ratio natin ay bababa. Okay? So, next, inventory purchases are made for cash. So, tumaas ang inventory, bumaba ang cash. Nasaan yung dalawa na yon? Nasa numerator natin pareho. Kaya naman, the answer is no effect pa rin. Inventory purchases are made on account. So, let's check. So, 4 over 5 yung ating inassume na figures. Bumili ng inventory, plus 1. On account, plus 1. Naging 5 over 6. 4 over 5 is 0.8. 5 over 6 is 0.83. So, therefore, ang current ratio natin ay tumaas. Sold an inventory on account. So, every time nagbebenta, palagi po tayong current ratio ay tumaas. Whether on account or for cash, parehas po yan na nasa numerator at parehas na mas malaki magnitude ng accounts receivable and cash. Kaya naman, increase ang din ang sagot natin with number 10. Alright. Question. Kung may tanong po tayo, iwanan lang sa comment section or mag-email po sa ryancanonroque@yahoo.com. Alright. So, let's erase yung mga sinulat natin. And we're going to compute this time and interpret the financial ratios na ginagamit ng mga managers when they try to analyze the assets. So, asset management ratios tayo. Ang kasama sa asset management ratios natin ay inventory turnover, and that would add the average selling period. We have the accounts receivable turnover and average collection period. By the way, ito po yung days in inventory at days in accounts receivable. At pag pinagsama yon, we will arrive at the operating cycle. We will include also the turnover for fixed asset and total asset turnover. Kung mapapansin natin, halos puro turnover to. Ang mga ratios natin, pag turnover, ang denominator nito ay yung pangalan ng turnover. So, inventory, ang denominator dapat niyan ay inventory, AR, and so on. Ano ang numerator natin? Generally, ang numerator ay sales. Pero, meron lang tayong konting story on the numerator. So, let's try to take a look at the example. Okay, let's continue using yung Sophia Trading Corporation. Inventory turnover is COGS over average inventory, meaning beginning plus ending over 2. What if in the exam walang average inventory, meaning meron lang tayo ending inventory? So what do we use? We just use the ending inventory. Huwag natin i-divide ng 2. Pero try to check if there's a way for you to compute for the average inventory because that is the priority. Okay? Cost of goods sold, sabi natin kanina, sales ang numerator. Ang priority sa numerator ng inventory turnover ay COGS. Pero kung wala talagang COGS, try natin i-check if we can compute for COGS. Pero kung hindi talaga makaka-compute for COGS, we make use of sales. Pero please take note na ang tawag sa kanya ay inventory turnover based on sales. Okay, so let's check. So in our example kanina, ang COGS natin ay nasa income statement. So here is our COGS. Cost of sales natin ay 365,580. And then inventory average, that would be your beginning and ending inventory. So here is our inventory for 2019 and 2018. So 120 and 102. Okay? So we have 3.2935 times inventory turnover. Pero what does it mean? Kasi pag times, mukhang mas madaling intindihin kung i-convert natin into days. Okay? So days in inventory or what we call average selling period. We just divide 365 days over inventory turnover. Yes, 365 days. If the problem is silent, we make use of 365. Unless sabihin ng examiner na 360 yung working days natin. Okay? So, we have the average selling period of 365 over yung na-compute natin kanina na 3.2935. So, that will give us 110.84. Siyempre, kung may 0.84 yan, meaning that's another day. So, we round up. So, 111 days po tayo. Okay? Ano ibig sabihin yan? Kapag bumili ka ng inventory ngayon, after 111 days on the average, tsaka mo pa lang siya mabebenta. Okay? So, we now have accounts receivable turnover. So, tulad ng sabi natin kanina, denominator is AR pero it should be average. Okay? So, ang numerator ay sales pa rin. Pero the reason why we have AR is because it is on account. Sa exam, pag silent ang problem, lahat ng sales natin ay on account. Pero you have to be careful, baka meron naka-indicate sa ilalim ng problem na sales were 80% on credit. So, ingatan po yung mga ganun. Baka ma-overlook. Okay? Pero, if wala talagang sinabi, all sales were on account. Okay? So, anong sales ba? Ano ang sales natin in our example? So, that would be net sales ay 522,000. Tapos, ang accounts receivable natin, let's check the balance sheet. Sa beginning and ending yan. So, ang data natin for accounts receivable, so that would be 72,000 and 66,000. Okay? So, here is our solution. AR turnover is 7.5652 times. What does it mean? Mas madali uling intindihin if you convert into days in accounts receivable. Pero, ang ibig sabihin lang naman ito, it will give us an idea how fast we are converting the receivables into cash, or in other words, how fast do we collect? So, how fast do we collect? Convert into days. So, into days, 365 over the accounts receivable turnover. Okay. So, ano ba yung accounts receivable turnover? Yung na-compute kanina. And that will give us 48.25 days. Again, round up po tayo kasi that's another day. So, 49 days. What does it mean? Ito po, operating cycle will explain. Yung operating cycle is the sum of your average selling period and average collection period. What does it mean? Magbenta ka today, bumili ka today ng inventory after 111 days, nabenta mo on account, kaya nakolekta mo naman after 49 days. Ibig sabihin, the total would be 160 days. That is your operating cycle. So, average selling plus average collection period is equal to your operating cycle. Next, your fixed asset turnover. Yung FATO natin or fixed asset turnover, again, sales ang numerator natin. Ang denominator natin ay yung pangalan ng turnover na fixed asset. Pero please take note na ito ay net. Net of accumulated depreciation. Kasi habang tumatagal, yung ating net fixed asset, kung wala naman nadadagdag na mga PPEs, pababa ng pababa because of the accumulated depreciation. Siyempre, dapat kaya ang expectation din natin pagdating sa sales ay pababa din siya. Kasi talagang yung efficiency ng ating machines or PPEs, hindi kasing efficient yan just like nung una natin yung binili. Kaya para match lang yung sales na na-generate for a particular period, dapat net fixed asset yung kino-compare natin. Because that will tell us how efficiently we are using yung ating fixed assets to generate our sales. So, ang ating sales is still 522,000. Tapos, yung ating fixed asset, natabunan lang, wait. Yung ating fixed assets, on the average, ay 516 and 486. So, we have total asset turnover of 1.04. Ibig sabihin, for every peso of our investment in fixed asset, we are making 1.04 na sales. Okay? So, here is our TATO. So, ito, the ratio expands beyond current assets to include non-current assets. In other words, lahat na. TATO or total asset turnover. Sales again over average total assets. So, ang total assets natin for 2019, this is for 2018. So, our TATO is 0.7537. Kada asset or kada piso ng ating asset, we are making 0.75. Okay? This time, we will proceed with debt management ratios. At ito yung mga debt management ratios sa pag-uusapan natin. May isang turnover uli na nandito na magiging related sa discussion natin dun sa mga turnover na nauna. And then, the debt to asset, debt to equity, na pangalan pa lang nung dalawa, ratio na agad or formula na agad, equity multiplier, and these two coverage ratios. Marami pang ibang ratios, pero ito yung mga most common na itatanong talaga. Most common. So, depende pa rin sa nature ng business. So, accounts payable turnover, we have here, syempre, turnover, denominator ay accounts payable pa rin. Pero, why do we have accounts payable? It's because of our purchases on account. Okay, again, we have to check yung purchases natin, kung merong credit purchases or cash purchases. Pero again, if the problem is silent, lahat ng purchases po natin ay on account. Okay? So, in our example, we have the balance sheet and the income statement. Hindi po nakalagay doon yung ating purchases. But, hindi natin pwedeng i-assume basta-basta na ang purchases natin ay equal sa cost of goods sold. We have to check. Since the balance sheet is giving you beginning and ending inventory, tapos may COGS tayo, remember the formula, we can make use of that. Beginning plus purchases less ending is your COGS. Here. So, ang purchases on account natin is 383,580. So, may asterisk, may computation tayo niyan later. But ito yung accounts payable natin ng 2019 and 2018. So, that will give us 8.7876 times. Ito po yung sinasabi natin. Yung purchases natin is COGS plus ending minus your beginning. Alright? So, ito ay galing sa income statement. Galing naman to sa ating balance sheet. And that will give us 383,580 na purchases. And assume to be lahat ay on account. Okay, accounts payable turnover na 8.7876. Mas madaling intindihan uli if we convert into days in accounts payable. And that is also known as average payment period. The accounts payable turnover will tell us how fast we are actually paying our accounts payable. And how fast, mas madaling intindihan if we express in days. So 365 over your accounts payable turnover. So using the data kanina, 365 over our answer. So we have 41.54, round up ulit. So we have 42 days. Ibig sabihin, bumili ka ng inventory ngayon after 42 days at saka mo pa lang siya nababayaran on the average. Okay, para saan to? We have the cash conversion cycle. Ang cash conversion cycle ay average selling period plus average collection period. Remember, yung dalawa na to ay operating cycle. If we deduct the average payment period, that will give us the cash conversion cycle. So, ito yung ating data. So, 111 days. Binili mo yung inventory ngayon. After 111 days, nabenta natin. Tapos, after 49 days, nakolekta yung ating accounts receivable. Pero, nung binili mo yung inventory mo dito, after 42 days at saka mo palang binayaran. Ibig sabihin, dito yung cash out, tapos dito yung cash in. Yung difference na to is our cash conversion cycle. So, gaano ka ba yun? Ito ay 160. Tapos ito ay 42 days. Kaya nga, 111 plus 49 minus 42 days, that would give us 118 days na cash conversion cycle. Ibig sabihin, nilabas mo yung cash mo ngayon, after 118 days, babalik na sa'yo yung cash. Alright, so that is your cash conversion cycle. Okay, erase muna natin yung mga sinulat natin. Okay. Again, this is our operating cycle, 160 days. Possible ba na magkaroon ng cash conversion cycle na 160 days din? Ibig sabihin, the APP should be 0. What does it mean? Yun yung mga scenario na cash on delivery. Ibig sabihin, pagdating ng inventory, bayad na agad. Kaya ang operating cycle ay equal sa cash conversion cycle. Alright. Oops, next ratio, debt to asset ratio. Pangalan pa lang ng ratio, formula na. So total liabilities over total assets. Looking at our financial statements or balance sheet, the total liabilities ay here, 300,000. Your total assets ay 720,000. Okay. So, debt to asset. Ibig sabihin lang, 41.67% galing sa utang, yung mga assets natin. Okay. Debt to equity, pinapakita lang yung proportion ng debt as compared to equity. So, pangalan pa lang uli ng ratio, formula na, total liab over total shareholders equity. So, we have here 300,000 na total liab, shareholders equity na 420,000. So, ang ratio nila is 0.7143:1. Okay, mas marami ang shareholders equity, mas marami ang owner's equity compared sa liability. Alright. Oops, equity multiplier. So, ito, sabi rito, it indicates portion of a company's assets that are funded by equity. Kaya naman, asset over equity siya. At please take note of this. It focuses on average amounts maintained throughout the year rather than amounts at one point in time. Kaya naman, average total assets over average stockholders equity. So, if we go back to our balance sheet, this is our average na total assets. At ito yung average stockholders equity natin. Pagdating sa equity multiplier, ang kinonsider natin dito ay yung mga common stock lang, hindi kasama sa preferred stock. Because by nature, ang preferred stock ay parang liability that we are obliged to pay for the dividends as if parang interest. Okay? So, equity multiplier that will be used later then in our computation, makikita natin na tinatanggal din natin yung preferred stock. So, the answer is equity multiplier na 1.9110. So, that is what we are going to multiply sa ating shareholders equity to arrive at our assets. So, ito po yung note natin, common stock plus APIC plus retained earnings. Yan yung shareholders equity natin sa part na to. Alright. Times interest earned ratio. It is a coverage ratio. Are we capable of paying our interest? Tapos sabi rito, a ratio of less than 1 is inadequate. Ibig sabihin, earnings before interest and taxes, kung mas mababa kaysa sa interest, hindi natin kaya magbayad ng interest. Okay? So, in our example naman, ang ating earnings before interest and taxes or EBIT is also our net operating income na 114,420. Okay? That is our numerator. At ang denominator natin ay yung interest expense na 24,180. There. 4.732 times. Alright. Fixed charge coverage ratio. Kung mapapansin mo, para lang din sometimes interest earned ratio, EBIT over interest. Pero we are trying to determine if we are capable of paying all the fixed charges. Kaya ang ginagawa natin, ano ba pambayad natin ng fixed charge? So mula EBIT, aakyat tayo sa income statement natin, add back natin yung fixed cost natin. Tapos interest plus fixed charge sa ilalim. Why? Kasi to pay for the fixed charges, after doing that, we have to pay for interest pa rin. Kaya naman, yun yung denominator natin. Coverage. Ibig sabihin, can we really cover or can we really pay for this denominator? So, EBIT over interest, yung kanina sa ating times interest earned ratio, add the fixed charge. But how do we compute for the fixed charge? If you remember the additional information, yung distribution ng cost of sales, 80 variable, 20% fixed. So, multiply natin yung 365,580 na COGS. Tapos yung OPEX natin, 60 fixed and 40 variable. Kaya 60% ng 42,000. And that will give us 98,316 as our fixed charge. Okay? Adding fixed charge both sa numerator and denominator, 1.7367 times. That is our fixed charge coverage ratio. Alright. This time, we will compute for the profitability ratios. These are what the managers are using to assess the profitability of the business. So these are the 9 ratios. Pero i-grupo natin yung 9 ratios na yan. Una, grupo ng mga margin. Pag sinabi mong margin, ang denominator ng lahat ng yan ay sales. Okay? Kaya, at ang numerator ay yung pangalan ng margin. So gross profit margin, gross profit over sales. Ano ba yung gross profit natin? Galing sa income statement natin. Okay? So, ang income statement natin shows 156,420 na gross profit over the sales na 522. So, 29.97. Okay? Operating profit, that is your net operating income na 114,420 or this is your EBIT also over your sales. So, that will give us 21.92%. Okay? And profit margin, yung nasa bottom ng ating income statement, your net income after tax. Okay? Sabi nga dito, we are trying to look how, not just on the COGS, but how the selling and admin or the OPEX, and also the interest and the income tax expense influence the performance. Kaya yung net income ay net income after tax over your sales. That is your profit margin. Okay. So, yung grupo ng mga margin, lahat ay divided by sales. So, this is your net income and this is your sales. 12.97%. Meaning, we are making 12.97 for every 100 peso na sales natin. Grupo ng mga returns. Okay? Pag returns sa pinag-uusapan, returns on blank. Itong tatlo na to, ito yung mga denominator natin. Pag return, ang pinag-uusapan natin ay net income. Pero syempre, hindi lahat ng net income ay kasama. Kaya if you go back here, yung net income dito, pwedeng hindi yung net income na pinag-uusapan natin sa returns. Why? Kasi kapag ang isang company ay pares na merong preferred stocks at saka common stocks, magkakaiba po ang ating net income na ginagamit sa profit margin at net income na ginagamit sa return. In what way? Because we have to deduct the preferred stock dividends to arrive at the net income available to common stock holders. Ito po yan. So, return on sales natin. Ang net income available to common stockholders, nakukuha yan, ito po, net income available to common stockholders. Yung net income natin na 67,680, i-minus natin yung preferred stock dividends na 2,880. Kahit na hindi ibinigay sa problem or kahit hindi ko inilagay dun sa handout or dun sa materials kanina, we will compute for the preferred stock dividends na sabi kasi dito sa balance sheet, going back sa balance sheet, we have here 8%. Here, preferred stock, 200 par value at 8% times 36,000. So, 8% of 36,000 ay 2,880. Kaya naman, ang net income available to common stockholders or what I call as NICS would be 64,800. Divided by the sales, 12.41%. Magkamukha lang halos sila ni profit margin except for ito ay you have to deduct the preferred stock dividends pa. 12.97 si profit margin, 12.41 si return on sales. Pero kapag walang preferred stocks, equal lang ang profit margin at saka return on sales. Let's move to the next return. Return on total assets. So, NICS pa rin yan over total assets. Pero, we have to consider the average total assets. So, 64,800, yung NICS na nakuha natin kanina, ito pa rin yung computation natin. And then, this is the average total assets. So, ang ROA or return on asset natin ay 9.36. Okay, 9.36%. ROA, if you remember, siya rin si ROI, Return on Investment. Okay? Next. Si DuPont formula. DuPont is saying something. Okay, if we go back to ROA, ang formula niyan ay NICS over total asset average. Pero sabi ni DuPont, pwede mo, sometimes hindi kasi given yung NICS, hindi given yung total asset average. Pero pwede kang mag-multiply sa numerator at denominator like this. Yung sales natin, nilagay natin sa denominator and numerator. Pag kinancel out mo yung sales natin, you will arrive at the same formula na NICS over total asset average. Okay? If you will notice, itong NICS over sales, pag may NICS, return na pinag-uusapan. Sales to, so return on sales. Kapag sales sa numerator, turnover yan. Total asset to, so total asset turnover. Ibig sabihin, ang ROA pala could also be the product of ROS and TATO, or total asset turnover. Kaya naman, if we check, ang ROS natin kanina is 12.41. Ang TATO na nakuha natin earlier is 0.7537. Ang ROA natin is 9.35%. If you will go back to ROA here, it's 9.36%. Sa ROA kay DuPont, 9.35. Nagkaiba lang due to, differences lang to due to rounding off. Okay? Again, kung walang preferred stocks tayo, ang ROS could be replaced by profit margin. Kaya yung ibang libro, profit margin ang gamit instead of ROS. So, ang ROA natin is PM times TATO. Sabi ng DuPont formula. Okay? Next return is ROE. return on equity. So, return, mix pa rin. Ang denominator natin ay average na stockholders' equity. So, ang mix ay 64,800. So, going back to our balance sheet, ito po yan. So, ang stockholders' equity natin uli ay common stock, APIC na 24,000, your retained earnings na 210,000, the total is 384 for 2019 here. Tapos for 2018, 340,800. So, our ROE is 17.88%. Okay, so ito yung interpretation natin dyan. That will tell you how well we are using yung investment ng ating mga common stockholders to earn. Okay? At may sinabi din dyan si DuPont. So kanina, sabi natin, return on equity is next over total shareholders equity average. Ito. Okay? Now, pwede ka uling mag-expand. So, next over sales, sales over TA average over TE average. So, kapag nag-eliminate ka ng mga yan, you will always go back to next over TE average. Kaya minsan, kung walang next, walang TE average, you just multiply all these three ratios. So, next over sales is ROS. Sales, turnover yan, total asset turnover. Oops, if you remember this one, this is your EM or equity multiplier. If we make use of the data a while ago, 12.41 times 0.7537 times 1.911 is 17.87 ROE using DuPont formula. Ang ROE using yung ating formula na next over average shareholders equity, 17.88. Again, yung difference lang niya is due to rounding off. Tapos, another note, ROS again here could be profit margin. Okay, so PM times tato times the equity multiplier. So, parehas lang sila. Alright? Again, if there are no preferred stocks. Okay. So, let's erase yung mga notes natin. Going back. Return on assets. This is another formula for return on assets na iba yung magiging sagot compared dun sa next over TA average natin. Why? Kasi if our intention is, ito, may note ako dito. If the intention is to compare your company's performance with other companies na with different amounts of debt over time for a single company that has changed its mix of debt and equity. Yung capital structure medyo nag-iba. Okay? So if we want to compare our company with other companies na magkaiba ng capital structure, this is how we compute for ROA para ma-compare lang. Okay? So, ang ROA natin is our net income. We will add back the interest expense, naka-gross up, 1 minus tax rate, and then divided by the average total assets. Kumbaga, parang net income over average total assets lang. Pero you have to add back the interest expense na naka-gross up. So, in our case, the net income here, please take note, the net income here is the net income after tax, not the net income available to common stockholders. Kasi nga, gusto natin na compare with other companies regardless of the capital structure. Okay? Kaya ito yung net income, 67,680, not the 64,800, plus the interest expense for 2019 times 1 minus 0.25. Kasi if you will notice, the tax rate is 25% in our problem. Average total assets, so that will give us 12.39%. Ang ROA natin kanina, if you remember, ang ROA ay 9.36%. So this one is a bit higher than the ROA that we computed a while ago. Alright. Ito naman yung mga per share ng mga ratios natin. Earnings per share, dividends per share, dividend payout ratio. Pangalan pa lang, medyo may idea ka na kung anong formula. Earnings per share, we talk about the net income available to common stockholders. Again, nakadeduct na si preferred stock dividends over the average number of common shares outstanding. Okay? So, kapag walang binigay na number of common shares na during the period or during the year, we will make use of the number of common shares at the end of the year na lang. Pero kapag meron kang beginning and ending, so we make use of the average again. Okay? So, net income available to common stockholders, ang amount niyan kanina, may note pa muna tayo dito. So, whenever a ratio divides an income statement balance by a balance sheet balance, so income statement and then the balance sheet balance, the average for the year is used in the denominator. Okay, that's why I highlighted here yung term na average. Ayan. Then, earnings form the basis for dividend payments and future increases. So, itong earnings per share, actually, itong net income na to, dito nakadepende yung magiging dividend payments sa mga common stockholders. Are we going to declare certain percentage, gaano karami i-declare natin, gaano karami yung i-retain natin. So earnings per share, next natin is 64,800. Ang number of common shares outstanding natin, if we go back, ayan. So if we go back, sa common stock natin, 10 ang par value. So for 2019, we have 150,000. Therefore, 15,000. Tapos dito 14,400. Okay? Ayan. Kaya ang average number of shares natin ay 15 and 14,400 divided by 2. I think that's 14,700. And that will give us earnings per share na 4.41 pesos. Ayan. Dividends per share. So depende kung gaano karaming dividends ang i-declare. Ang dineclare na dividends ngayon ay 28,800 per share. So divided by the same number of common shares, yung average natin. So that will give us 1.96. Okay, that will tell you how much income was or will be distributed for each share of common stock outstanding. Again, ito yung kinita per share, earnings per share. Ito yung dividends per share. So, from the idea, we can compute for the dividend payout ratio. Ibig sabihin, out of the earnings, magkano dividends lang yung dineclare natin. Kaya ang formula ng payout ratio ay 1.9 dividends per share over earnings per share or 1.96 over 4.41. Meaning the D4 is 44.44%. Saan napunta yung 55.56%? Yung nawawala, that is your retained earnings. Okay? Minsan ang tawag natin dyan ay dividend retention ratio, dividend pull out, or bail out ratio. Okay? So, this time, the last set of ratios, yung market ratios natin. So, we have here the price earnings ratio, market book, dividend yield. Lahat to, since market ratio, we will make use of the market price per share. The first ratio is price earnings. Price earnings. Kaya market price over earnings. MPS over EPS. Ang market price natin sa additional information kanina is 20 pesos. Ang earnings per share na na-compute natin a while ago is 4.41. Meaning, we have here 4.54. Ang gusto natin na price earnings ay mataas. Yun nga, but pag mataas, kung gusto natin na mas mataas, ibig sabihin, the investors are willing to pay a premium for a company's stock because of optimistic future growth prospects. So, iniisip niya na, kumaga parang for every earnings, you have to pay for 4.54. Willing ka magbayad ng premium. Okay? We have the market book ratio. Market book. Kaya naman, market price over book value per share. So, the market price is 20. Meron na tayo. Pero yung book value per share is magkano? Let's check the book value. So, ang book value natin per share, we are pertaining to the common shares again. So, number of common shares outstanding, pero at the end of the year lang. Okay? Magkano yung common stock natin plus APIC plus RE? That would be your entire na numerator for the computation of your book value per share. Dahil ang may-ari talaga niyan ay yung mga common stockholders. Okay? So, ang common stock plus APIC plus RE natin, ang total ay 384,000 over 15,000 at the end of the year. So, ang ating book value ay 25.6. So, if you will notice, yung book value natin na 25.6 ay iba sa market value natin na 20 pesos. Kasi nga, yung market price natin na 20 pesos or any other market na price, sabi dito, nilagay ko rito na because it reflects pati yung mga expectations natin ng future earnings and dividends. Pero yung book value is based on the historical cost. Based on historical cost meaning sa common stock, sa par value, APIC, yung premium natin over the par value, and then the retained earnings. Okay? So we have 25.6. So going back sa market book ratio, we have 20 here and 25.6, 0.78125. The market value is 20. Pero pag nagbayad ka ng 20, ang nasa libro 25.6. Kung ako yung investor, bibili ako nito kasi malaki ang value ko sa libro ng company. Kumbaga, I can only pay for less than a peso for 1 peso na book value. 0.78125. Now, the last ratio na isasama sa discussion would be dividend yield. Pag sinabi natin yield, this ratio identifies the return. Ang return na tinutukoy natin is actually not the earnings. Kasi yung earnings na yan, tulad ng kanina, hindi naman lahat dinidistribute. Ang talagang na-return lang sa atin ay yung dividends. Bakit pinag-usapang return? Meron ka kasing investment. That is your market price per share. So, dividends per share na 1.96 kanina over 20 pesos na market price per share. Ibig sabihin, we are yielding 9.8%. Okay? That is our dividend yield ratio. Alright, let's have some true or false questions. Kapag nag-green, true. Pag nag-red, false. So, I'll read the statement first and then you have to say your answer before I reveal yung answer natin. Number 1, common size statements are financial statements of companies of similar size. Similar size, the answer is false. Walang sinabi na similar size. The companies could be different size, kahit pa significantly different. Pero pag common size, ibig sabihin everything is expressed in terms of percentage. 100% ang total nila pare-parehas regardless of the actual size. Next, one limitation of vertical analysis is that it cannot be used to compare two companies that are significantly different in size. Nasabi ko na yata yung sagot. So the answer is false. Pwede po. Okay? Number 3. The sale of used equipment at book value for cash will increase earnings per share. Okay? Earnings per share ay NIX over the number of shares. Check lang natin kung affected. Used equipment at book value binenta for cash. So, may effect ba sa ating net income? Meron ba tayong gain or loss? Meron ba tayong binenta siya at book value? So, therefore, walang gain, walang loss. Meron bang increase in the number of shares? Wala rin. So, will it increase the earnings per share? The answer is false. So, nag-red siya. Alright. Next. An increase in the number of shares of common stock outstanding will decrease a company's price-earnings ratio if the market price per share remains unchanged. So, what is our answer? Ang ating price earnings, market price per share over earnings per share. Kung maririnig natin, parehas na merong per share. Kaya naman, yung increase in the number of shares, wala namang pagbabago sa market price. Will it decrease the price earnings ratio? The answer is no. So the answer is false. Okay? If a company's asset test ratio increases, its current ratio will also increase. Remember, asset test is quick ratio. So, quick assets ang kasama rito. Pag tumaas yan, its current ratio will also increase. The answer is yes. Pero pag binaliktad natin, current ratio nag-increase, it doesn't really mean na pati yung quick ratio mag-i-increase din. Okay? Pero pag quick ratio ang tumaas, automatically current ratio will also increase. The answer is nag-green, so it's true. Next, short-term borrowings or short-term borrowing is not the source of working capital. What is your answer? Hindi pala source ng working capital or short-term borrowing. Your answer is nag-green, so it should be true. Why? Kasi ang working capital is current asset minus current liability. Pag nag-short-term borrowing ka, tataas to. Pag nag-minus, walang effect. That's why hindi siya source ng working capital. Okay, so that's correct. Short-term borrowing is not a source. Profitability ratios are frequently used as a basis for evaluating management operating effectiveness. I think na-mention ko to kanina. Kung ang estudyante, grades ang basihan, yung nasa grading system ng mga schools. Pero ang mga managers ng isang company, ang basihan natin ay, let's erase this. Ang basihan natin ay yung income statement wherein you can get your profitability ratios. So the answer is true. Okay. Oops. MC theories tayo. Konti lang to, mga 10. Which of the following below generally is the most useful in analyzing companies of different sizes? Answer in 5, 4, 3, 2, 1. Common sized. Okay? A balance sheet that displays only component percentages is called, percentages lang. So meaning that is, ano analysis yon? Vertical analysis or the common size balance sheet. Okay. Number 3, in horizontal analysis, each item is expressed as a percentage of the, which one? The base year figure. Number 4, the acceleration in the collection of receivables will tend to cause the accounts receivable turnover to, so mabilis ang collection, that will increase. Okay. Number 5, a company with 60,000 in current asset and 40,000 in current liability and then pay 1,000 current liability. As a result of this transaction, the current ratio and working capital will, yung working capital mukhang alam na natin mangyayari. Bawas sa cash, bawas sa accounts payable. Therefore, working capital remain the same. Okay? Pero what will happen to the current ratio? Pero kaya lang, dito pa lang may sagot na tayo. Letter C. Pero what will happen to the current ratio? Just to show, 60 over 40, pag nagbayad ng 1,000, magiging 59 over 39. Kaya ang difference nito, 20. Difference nito, 20 pa rin. So, ano ang ating current ratio? Dating 60 over 40 or ang 60 over 40 natin ay 1.5. So, yung 59 over 39 ay 1.51. So, therefore, increase tayo. So, what's the answer? It's letter C. Okay? Now, Roslyn Corporation has 2-to-1 current ratio. This ratio would increase if, let's check number 1, wrote off an uncollectible receivable, debit allowance, and credit AR. Parehas naman na nasa numerator, wala pong effect. So, mali yung letter A. Letter B, bumili ng inventory on open account. So, tumaas ang tumaas ang inventory, tumaas din ang accounts payable. Pero check natin yung effect. 2-to-1. So, 2, 1. Bumili ng inventory, plus 1, plus 1. Magiging 3 over 2. Dating 2, naging 1.5, decrease. So, mali ang letter B. Letter C, the company sold merchandise on open account that earned a normal gross margin. Oops, sabi natin kanina, kapag nagbebenta ng merchandise, tapos lalo na sinabi pa lalo na may gross margin, this will increase. Okay? The current ratio. So the answer is letter C. Erase na natin. Hindi na tayo pumunta sa D kasi nakita na natin yung sagot. Alright, and number 7. A measure of a company's long-term debt paying ability is long-term debt paying ability. Return on asset, no. Dividend payout ratio, no. Oops. C, time interest earned ratio. Number 8, financial ratio which assess the profitability of a company include all of the following except profitability pinag-uusapan. Mukhang lahat ay tunog profit, so dividend yield, gross profit, earnings per share, return on sales. So, ang mali dito ay dividend yield because this is part of your market ratio. Okay. Number 9. So, Kevin has 0.65 to 1 na current ratio. So, a cash dividend declared last month is paid this month. So, what is the effect of this dividend payment on the current ratio and working capital respectively? Ang daming tanong tulad dito. Basta tandaan natin, pag nagbayad tayo ng liability, wala namang sinabi na may discount or what, same magnitude, walang effect sa working capital. So, ang pamimilian na lang natin ay B or C. Ano nangyari sa current ratio natin? So, 65, sabihin na natin 65 is to 100, kaya 0.65 yan. Kung nagbayad ka ng dividend, sabihin na natin na 5, so magiging 60 over 95. Magiging 0.63. So the answer is from 0.65 naging 0.63. So it will decline yung current ratio. But the working capital, no effect. And number 10, a high receivable turnover ratio indicates what? Mataas ang receivable turnover. Many customers are not paying. Hindi. Customers are making payments quickly. That's the answer. Alright? Okay. So we're done with all the other parts of the discussion. We will now proceed with the other problems. So we will solve for problems 2 to 11. Mga short problems na lang itong mga ito. Yung kanina kasi comprehensive yung problem number 1. So that included all the possible ratios na pag-usapan natin or possible na lumabas sa exam. Okay. So, here is your problem number 2. Okay, in problem number 2, the net income reported by the company for 2018 is, and for 2019, so ito ay trend analysis. So the net income in 2017 was 2 million. And then, using 2017, the net income decreased by 40% in 2018. So we can answer in number 1, 2 million ang ating net income times decreased by. So ibig sabihin, 60% na lang. Times 60%. So the answer in number 1 is 1.2 million pesos. Okay? Number 2, the net income reported by the company for 2019 is or was increased by 125%. So therefore, 2 million times increased by. So ibig sabihin, multiply natin to na 2.25. So the answer is how much? 4.5 million pesos. So that's number 2. Okay? So ang palaging pinagbabasihan natin is the base year, which is 2017. Okay? So that's problem number 2. Let's proceed with problem number 3. Erase lang muna natin. Problem number 3. We are asked for the current ratio and the quick ratio. So, out of all the given here, so we have the current ratio. Identify natin ano-ano yung mga current assets natin. So, 200,000 na current asset. And then, cash na 100,000. Plus 100. Plus your inventory of 440 plus meron pa ba? Wala na. So current assets ay 740. Ang current liability natin ay accounts payable na 80 plus what else? Your bonds payable in 10 years hindi kasama. How about your interest payable in 3 months? Yes, plus 25. Plus, kasama ba yung notes payable in 6 months? Yes, plus 250. So the answer is, ang current liability natin ay 355. So, ang ating current ratio ay 740 divided by 355. So the answer is 2.0845. 2.0845. So, dinagdagan lang natin ng decimal places. The quick ratio would be, so we have the current liability na, so we just have to determine ano yung mga quick assets. AR, yes. Your cash, yes. And then, inventory kasama, no. So, 300. So, ang quick assets natin ay 300. So, what is your quick ratio? So, that would be 300 divided by your 355. So, 300 divided by 355, the answer is 0.8451 or 0.84. Okay? If the inventory amounting to 50,000 was sold with 40% markup on cost, compute for the current ratio. So, ang inventory natin, mababawasan ng 50,000. Affected ba yung current assets? Yes. Affected ba yung quick assets? Tingnan natin. Magkano inventory? 50,000. Magkano yung cash natin? May 40% markup on cost, so that would be 70,000. Okay? So, plus cash tayo na 70,000 minus inventory na 50,000. Anong effect sa cash, sa current asset natin? So, affected si cash at saka inventory. So, ang neto natin ay 20,000. So, ibig sabihin, plus 20,000 kay current asset. How about the quick asset? Affected ba? Affected because nadagdagan tayo ng cash na 70. So, plus 70,000 si quick asset. So, ang bagong current asset natin ay 760. Ang bagong quick asset natin ay 370. Wala namang nagbago sa current liabilities natin. Kaya, ang current ratio natin na bago ay 760 divided by current liability na 355. So, the answer is 2.1408. So, 2.1408. Alright. Quick ratio natin ngayon. So, that would be 370. 370 divided by 355 na current liability. So, the answer is 1.0423. Okay? 1.0423. So, that is your problem number 3. Okay? So, let's move to problem number 4. Problem number 4. The question is the amount of working capital and the amount of quick assets. So, identify lang natin alin ba dito yung mga current assets and current liability. Accounts payable, current liab. Accounts receivable, current assets. Accrued liab, here. Your cash, here. Income tax payable, here. Your inventory, current assets. Marketable securities, current assets. How about the notes payable due in 3 months? Current liab. Prepaid expenses, 15,000, current assets. So let's compute for the current assets. So that would be 110,000 plus 80,000 plus 140,000 plus 250 plus 15,000. 595,000. Okay, 595,000. How about your current liabilities? That is 145 plus 4,000 plus 10,000 and your 85,000. So that would be 244,000. Okay? So what is your working capital? 595,000 minus your 244. So the answer is 351,000. That is your working capital. The amount of quick assets. So not all the current assets are included. So tanggalin natin yung check. Compute natin yung quick assets natin. Accounts receivable, yes. Your cash, yes. Your inventory, no. Marketable securities, yes. How about the prepaid expenses? No. So ang kasama lang 110 plus 80, 190 plus 250. So that is 440,000. So that's problem number 4. Here is our problem number 5. So we are asked for the inventory turnover for 2019, the days in inventory or the average selling period, and then the net income. Okay. Okay. So inventory turnover. Inventory turnover is equal to your cost of goods sold over your inventory average. Okay? May cost of goods sold tayo na 480,000. Okay? Divided by the inventory average. Kaya lang, ang inventory na meron lang tayo ay at the end of the period. So, inventory end is equal to magkano inventory end natin? 180,000. So, yung beginning natin ay hindi natin alam. Okay? But, we know the purchases. So, if we remember, so beginning, wag tayo dito. So, we have beginning plus purchases less ending is equal to your cost of goods sold. Okay? So, beginning ang nawawala. May purchases tayo na, how much is our purchases? 520,000. Minus ending natin na 180. Ang cost of goods sold natin ay 480. So, ang beginning natin ay magkano? So, 480 plus 180 is 660 plus minus 520. The beginning balance is 140,000. If this is 140,000, so the average is 160,000. Average ng dalawa. So, 160,000. So, the inventory turnover is 3. Okay? That's answer in number 1. In number 2, sabi rito, days in inventory or average selling period. So that would be average selling period. So that is 365 over 3. So the answer is how many days? That would be 121.67. Pero sabi natin, we have to round up. So that is equivalent to 122 days. Okay? So that is 122 days. Next. The times interest earned ratio of Salas company was 3.25. So next tayo. So number 3. So that would be times interest earned ratio is equal to EBIT over interest, and that is equal to 3.25. And then it says here that the interest expense is magkano to? This is 30,000. Therefore, your EBIT is equal to 30,000 times 3.25, and that is 97,500. That is the EBIT. But the question is, magkano ang net income? So, our EBIT is 97,500. Our interest muna ang ima-minus natin, which is 30,000. So, our EBT, earnings before tax, ay 67,500 minus the taxes. Na ilang percent ang tax natin? May binigay ba? 40%. So, 40% of 67,500 times 0.4, that is 27,000. Therefore, your net income is 40,500. That is your answer in number 3. 40,500 pesos. Okay, so we will move to problem number 6. Okay, problem number 6, the question is, what was the return on common stockholders' equity for 2019? Okay. So, ROE is equal to NIX over your total equity average. Okay. So, ang NIX natin, binigay ba ang NIX natin? Ang net income available to common stockholders, if you check, we have the net income na 240,000. And then we also have the dividends on preferred stock na 20,000. So therefore, this is 220,000. Okay, again, this one, yung NIX natin ay 240,000 na net income minus the preferred stock dividends na 20,000. What is our total equity average for 2018 and 2019? So tingnan po natin. For your 2018, your common stock would be 650 plus 150, so that would be 750,000. And then for your 2019, 870 and 370, total of 1,170,000. Ang average ng dalawa ay 960,000. So therefore, kung ito ay 960,000, the ROE or return on common stockholders equity for 2019 was 22.92% or approximately 23%. So that's the answer in problem number 6. Let us proceed with problem number 7. The question is, or the requirement is, for us to compute for the price-earnings ratio on common stock on December 31, 2019. Okay? So, price-earnings ratio, price-earnings, so market price per share over the earnings per share. So, let's compute. So, ang hinahanap sa atin ay price-earnings ratio. So, that would be market price per share over EPS. Ang market price per share ay binigay na 144. Ang hinahanap na lang natin ay earnings per share. So that would be NIX over your number of shares. Ano ba ang NIX natin? We have the income of 1.2 million. So here, let's check. We have the net income of 1.2 million. Pero again, we have to deduct the preferred stock dividends of 300,000. So that's a total of 900,000 na net income available to common stockholders. So that would be 900,000 over the number of shares na, ilan na number of shares natin? Common stock, 100,000. So that would be 9 per share. So if that's the EPS, you just put it here. So the answer or the price earnings per share would be 16. So that's the answer in number 7 or problem 7. Problem number 8. So we have to compute for the following: the estimated inventory amount and then your cash conversion cycle. So given na the current assets of 316 Enterprise consists of cash, AR, and inventory only. So, walang prepayments yung current assets natin. So, here are the other information. So, inventory amount ang tinatanong. Normally, ang naiisip natin pag inventory, isip tayo ng ratio na may inventory dyan. So, most probably, it could be the inventory turnover that could lead us to the solution. Or, remember, ang current ratio at quick ratio, ang difference lang nilang dalawa ay inventory. So, isa sa dalawa na yan could be our solution. So, let's try. Okay. So, ang current ratio natin ay 2, quick ratio natin ay 1.25. So, yung difference niya na 0.75 pertains to your inventory. Okay? So, that is equal to your inventory over your current na liability. But the question is, to get your inventory, kailangan alam natin kung magkano yung current liability natin. So, binigyan din tayo ng current ratio na CA over CL na 2. So, ito po yun. Okay? And then, we also have the working capital na 1,120,000. Ibig sabihin, that is our CA minus CL is equal to 1,120,000. Meaning, CA natin is 2CL. Kasi ito pag in-expand, so that would be CA is equal to 2CL. Ilipat doon. Okay? So, 2CL minus CL is equal to 1,120. Therefore, your CL is equal to 1,120. Kaya kung 1,120 yung current liability natin, substitute here, our inventory would be equal to 1,120 times the 0.75, which is, magkano yun? 120 times 0.75, that is 840,000 pesos. That is our inventory. Okay? Let's continue with number 2. We are asked for the cash conversion cycle, and that is equal to the average selling period plus average collection period minus your average payment period. Let's check kung anong meron tayo. As to average selling period, ang meron tayo ay inventory turnover. Ang inventory turnover ay 5. So, 360 over 5. Why 360? Kasi sabi rito, ang working days natin daw ay 360 days. Kaya naman, ang ating average selling period ay 72. Plus, ang average collection period natin binigay na 42. So, 42 na lang tayo rito. Okay? Ang average payment period naman natin, binigyan tayo ng accounts payable turnover. So, minus 360 over, ang turnover natin ay 10. Therefore, ito ay 36. Therefore, ang ating cash conversion cycle ay 78 days. Okay? So, that's problem number 8. So, let's proceed with problem number 9. So, here is your problem number 9. Okay? We are asked for the inventory balance for inventory account, for accounts receivable, and retained earnings. So, ang given natin dito ay isang balance sheet na pag tinignan natin, yung nawawala na inventory and accounts receivable, ito yung naka-question mark sa atin. Okay? And also the retained earnings. May extra lang na nawawala na accounts payable. Okay. So, here, we are asked for the inventory account balance. Ang usually na ginagamit natin dito ay inventory turnover. So, meron tayong inventory turnover based on sales. Ito naman ay inventory turnover based on cost of goods sold. Pag tiningnan mo, yung dalawa na yan, pag pinag-minus natin yan, itong dalawa na to, so that would give us 4. That pertains to your gross margin. Ibig sabihin, inventory turnover based on GP. Okay? So, ang GP natin ay 320,000. So, let's compute for our inventory account. Okay? So, sabi natin kanina, inventory turnover based on sales. 15. Inventory turnover based on COGS. That is 11. Kaya naman yung 4, yung inventory turnover based on gross profit. Remember, ang denominator nito ay inventory. So, ibig sabihin, ito palang 4 na yan is equal to your gross profit over your inventory. So, magkano yung gross profit natin? 320,000 over the inventory. So, we can now compute for the balance of inventory. Magkano ang inventory natin? That is, inventory is equal to 320,000 divided by 4, so that is 80,000. Okay? Now, ang nawawala na lang sa given natin sa asset section is your accounts receivable. So, ang ating total assets ay 432,000. Okay? So, let us compute for the accounts receivable. Work back lang natin yan. So, 432,000 minus, so for your AR, so that would be 432,000 na total asset minus the 294,000 na property, plant and equipment minus the inventory na 80,000 minus your cash na 25,000. Therefore, your accounts receivable is amounting to 33,000 pesos. Okay? That is your AR. So that's number 2. And the last item in problem number 9, erase muna natin. Okay. So sinulat lang natin yung nasa liabilities and equity section ng ating balance sheet. So ang nawawala sa atin ay accounts payable and retained earnings. So asset section kompleto na. Now, given tayo ng current ratio na 1.5:1. So that would be your CA over your CL. So compute natin, alam na natin kung magkano yung CA natin. Ang CA natin ay yung ating cash. So let's check. Ang CA natin ay yung cash na 25,000. Tapos, so accounts receivable na na-solve natin na 33,000. Inventory na 80,000. Kaya ang total na current assets natin ay 138,000. Okay? So the current assets ay 138,000 over your current liability. So to get the current liability, so that should be 138 divided by 1.5. So magkano yun? The CL is 92,000. Okay? So kung CL ay 92,000, magkano ang accounts payable natin? Remember, itong dalawa na to yung ating current liabilities. So therefore, the accounts payable here is 72,000. Okay? Kaya naman, itong retained earnings natin, makukompute na natin. 432,000 minus lahat ng items na yan, and that would give us 40,000 as our retained earnings. Okay, so that's problem number 10. Problem number 9 rather. And now, we are going to proceed with problem number 10. Okay, in problem number 10, the question is, how much current liabilities must be paid to achieve the minimum current ratio? Okay, so, ang current ratio natin ngayon ay 3:1. Pero ang gusto natin na minimum desired ratio is 5:1. So, at present, the net working capital is 40,000. So, magkano dapat bayaran to achieve the 5:1 na current ratio? Okay. Ang gusto natin na current ratio, CA over CL ay 5. Pero currently, ang CA over CL natin ay 3. So, if we transfer CL sa kabilang side, so CA is equal to 3CL. Sabi dito, working capital at present is 40,000. So, working capital is CA minus CL is equal to 40,000. Kaya naman, if we substitute 3CL dito sa CA, so that would be 3CL minus CL is equal to 40,000. So pag minus natin, 2CL is 40,000. So ang current liability natin ay 20,000. Okay? So if that is the current liability, magkano ang current assets natin? Sabi natin, CA is 3CL. So substitute here, CA is 60,000. That is our CA. Now, kung ito ang gusto mong mangyari na minimum na current ratio, so CA over CL should be 5. So 60,000 na CA over 40,000 na CL. Magbabayad tayo ng ating payable na hindi pa natin alam kung how much. That is the question. And after payment, it should be equal to 5. So, ano tong payment natin na to that will give us 5 na current ratio? So, ilipat yung 40 minus X sa kabilang side. So, that would be 60,000 minus X. Ilipat sa kabila. This is 20,000. So, lipat natin sa kabila. So, that would be 100,000 minus 5x. Okay? So, lipat sa kabila ulit. So, 4x is equal to, pakililipat doon, 40,000. Therefore, x is equal to 10,000 pesos. Meaning, kung gusto natin ma-achieve yung 5, dapat magbayad tayo ng 10,000 na payable. And let's check. 60,000 minus 10,000 over 20,000 minus 10,000. So that would be, magkano to? 50,000 over 10,000. So the answer is really 5. So we are able to achieve the minimum desired na current ratio by paying 10,000 na accounts payable. Okay, so we are now down to the last problem, number 11. Okay, the last problem is how much was the sales revenue? So, Abukuta Company reported cost of goods sold. So, may 250 na COGS and operating expenses of 150,000. Okay, including depreciation of 20,000. Okay lang. So, kasama pa rin sa OPEX yung 20,000. Income taxes are 35%. And then the after-tax return on sales is 23.4%. Kaya magkano daw yung sales revenue? So let's compute. Alright, so sabi natin, ang sales natin ay yun yung nawawala. So let's call it X. So ang COGS natin ay 250,000. And then our OPEX ay 150,000 kasama si depreciation. Okay, kaya naman ang operating income natin ay X minus 400,000. Yan. And then sabi rito, ang after tax return or our net income, walang sinabing interest expense. So tax na lang yung ima-minus natin. Ang after tax natin na return ay 23.4% of your sales. So, 0.234 ng X natin. That is our after-tax return. Kaya naman, itong X minus 400,000 para maging 0.234X, dapat ito i-multiply natin ng times 1 minus the tax rate. Okay? Multiply natin ng 1 minus the tax rate. And ang tax rate natin ay 35%. So, ilagay na natin dito. I-multiply natin to ng 65%. Okay? Kaya naman, pag inayos natin yung equation natin, so X minus 400,000, multiply natin ng 0.65. Yan ay equal sa 0.234 of your X. Ito po. Okay? So, if we expand this one, 0.65X minus 0.65 times 400,000 is 260,000 is equal to 0.234x. Pag nilipat natin si 0.234x dito sa kabila, so that would be 0.65 minus 0.234, that is 0.416x is equal to 260,000. So, your X is equal to 260 divided by 0.416. So the answer is 625,000. Okay? So let's check. If this is 625,000, ito 625,000. So, itong operating income natin would be how much? Check natin. So, 625 minus 400, the operating income is 225,000. Okay? Magkano income natin after tax? So, multiply natin ng 65%. So, that would be how much? So, 225,000 times 0.65. Oops. 225 times 0.65. That is 146,250. Check natin. If 146,250 ba, divided by the 625,000 will give us the 0.234 or 23.4%. So, divided by 625,000. So, lumabas na 0.234 or 23.4%. Okay. So, that's problem number 11. So, thank you so much for watching this video. I hope you learned something. And if you have question, please don't forget and don't hesitate rather na mag-email sa sulat natin. Ayan. ryancanonroque@yahoo.com, or you can leave in the comment section below para masagot natin yung mga questions ninyo. So again, thank you so much for listening sa review ng financial statements analysis. Ingat po tayong lahat and God bless.